I'm joined now by Steve Osho, the co-managing partner, Commercio Partners Limited, to review some of our top stories this week. Welcome to the show, Steve. Great to have you on again.
Morning, Rolake.
Great stuff. So we're going to start with the latest reports on Niger's crude oil production. You know, we are really ideally trying to trail this 1.7 million barrel target that's in our 2024 budget. Yeah. But we're not doing so well. Yeah. We are not. So what's happening and what more needs to be done?
I think from the statistics and the numbers that have been released by OPEC, even though we have two sources or two numbers, one from direct source, from the OPEC member, and the other one from the secondary source.
Yeah.
The direct source is saying we are producing 1.23, million barrels per day, while the other one say 1.3. And if you look at that, it takes us below what Libya is actually producing and making them one of the largest
producers
in Africa. And it dropped off from where we were since January, because in January we were about 1.4 million barrels per day, and we moved down to 1.3, but now we're at 1.23. So it tells you a story about all the challenges that we have has not been tackled so far. And I think that's where the major problem is.
Yeah, but last year, NNPC did make quite a lot of pronouncements, and we saw a lot of moves to increase surveillance of the oil supply routes to try and tackle illegal oil bunkering. Yes. What else can they really do? Is it that those strategies are not effective?
I think it's going to take some time before you start seeing the effect of some of those strategies from the government. But again, I think we need more of coordinations of all the agencies that are working to tackle the theft within that sector. In terms of what has been done so far, I'm sure you're in social media, you're in the news as well. You've seen a lot of impact of some of the activities that have been put in place to check some of those illegal productions of oil and all of that from Modelo refineries that are very illegal. And you've seen how most of the forces have actually gone to the creek to rain on these guys who are actually doing smuggling. But again, I think there is a lot of loopholes that are actually not being blocked within that space. And we need a lot of transparency and dedication from all these other forces that were actually tasked with the responsibility. And again, I think from the government point of view, we need to move from just using the military or the force, into using data as well. If you look at what's happening in Saudi Arabia, there was not going to be a drop of oil in Saudi Arabia without the government knowing. We've seen that statistic before. Why can't we move into that direction? I think that's one of the reasons, or that's one of the areas that NNPC and the federal government should be looking at how to harness that opportunity, rather than just putting so much pressure or reliance on the guys on the ground. Yeah,
beyond security, we know it's a multi-pronged approach, but one of the comments that has been made in the past is around the fact that we should actually look at the long-term trend of investment, FDI, into the oil and gas sector.
Yes.
Because we may now start to be feeling the effects of maybe some of the divestments or the consolidation and the lack of investment. Do you think this is part of the outcome of that over a period?
I think it's part of the problem. But since the NNPC Limited has actually been reorganized, I was expecting to see more flow in terms of investment going into that space. But again, we are militating against the trend in the world, where people are moving from the fossil fuel into renewable energy. So I think that's another challenge that we have. But again, in terms of investment, we still have a lot of investment going into that space, because there's still demand for oil, globally. So I think we just need to find a way to direct a lot of investment, not just from the local investors, but from the offshore investors who are really keen and genuinely interested in that sector.
Yes.
And I think that will change a lot of things. And again, at the same time, we need to tackle the security issue in some of our oil producing states. There have been a lot of talks around using the host community, incentives and all of that, and bringing them together as stakeholders to enhance monitoring some of those assets, the national assets. But as it were, from what we've seen in terms of number, it means that we still have a lot of work to be done.
Indeed, quite a lot of work to be done. Interestingly, there was a report, I think about a week ago, about the establishment of the Africa Energy Bank.
Yes.
We're seeing a lot of retrenchment in global capital away from fossil fuels, and now the creation of this African financial institution that will be focused exclusively on the energy sector and hopefully able to play a stronger role in funding oil and gas projects. Well, let's move to Europe now. The European Central Bank has held its key rates. Interesting times around the world, because we thought there would be a slight loosening in global monetary policies around the world. But Europe has held its key rate. What do you think is a main driver there?
I think one thing that the regulators or the monetary policy authorities around the world have been very particular about is about data.
Okay.
And from the data that they've seen since the beginning of this year, I think inflation is still a bit, even in Europe, it's still a bit sticky. But though they've seen a bit of reductions in inflation rate from the high that they recorded in 2020, I think 2022 or 2021, to the high of 10.6, we've seen it drop to 2.4% right now, and still slightly higher than the tolerance level, about 2%, which is the target. But I think the problem there is because they've seen, static lending from the banks.
Right.
And they've seen slow growth in the Eurozone. So I think that is one of the reasons why they're trying to, let's be sure that we need to drop rate now before we actually can go into that direction. Yeah, I think it's going to take, they're going to watch a lot of those data. There's a lot of speculation that maybe in June, there's a possibility of them dropping rate. But again, I think there's going to be some level of statistics analysis to ensure whether they want to go that route and that. And there's been a lot of debate again, whether the ECB is actually tracking the Fed.
Yes.
And the Fed, I heard that Lagarde was saying that, well, the ECB is ECB. It's different from Fed. Everybody is driven by
they say that, but we know they keep an eye on what happens in the US market because of the contagion effect.
Exactly. Yes, I agree.
Yeah, and speaking of the US market, we're pretty sure, or it seems like you see the traders, they've sort of stopped betting that there'll be several rate cuts this year because the US economy is actually heating up again. We're seeing inflation increase slightly. We're seeing jobs growth. So the Fed plan for these multiplicity of rate cuts may not actually materialize.
I don't think so. Yeah. And I think the market is actually reacting to that.
Yeah.
You've seen bond yield actually, ticked higher when the CPI data actually came out because the market consensus was actually slightly lower than what it printed at. And because of that, you've seen a bit of reaction in that space. And that has actually slowed down investors and market traders a bit in terms of expectation for rate cuts from Fed between the third quarter or second quarter this year to the end of the year. And I think that's going to play out again more. That's been very sticky. Inflation is still very sticky. And they're looking at that data aggressively and conscientiously. So I think it's going to take a bit of time. And they would probably just see the pass-through effect of what they've done wait it out to see what effect that will be. In terms of job data is fantastic. Consumption is still good, but again, they're a bit worried in terms of the cost of house and mortgages, and it's actually affecting.
And of course, with the U.S. elections on the horizon, this is a very political decision, potentially for Joe Biden.
Yes.
But I also, if you saw at the top of my show, I was talking about the strengthening U.S. dollar.
Yes.
We're seeing several currencies, the euro, the sterling, the yen, fall against the U.S. dollar.
Yeah.
And this is going to have some implications for other markets around the world.
Yes.
Yeah.
It is going to have some implication around the world for some of the currencies. And I think that's the reason why, if you look at what's happening globally, ECB, Bank of England, even some of the monetary policy authorities in Africa, everybody is just trying to ensure that they put out the right monetary policy directions or directives that can checkmate some of these, weakening of their currency against the dollar. And I think we're going to see more of that and transit effect of how those policies will affect some of those countries going forward.
And of course, we're worried about capital flight and trying to attract capital inflows.
Yes.
Okay, well, let's move on to another issue. WTO, the World Trade Organization, says Africa will witness one of the fastest rates of growth in trade. Meanwhile, here on the continent, we're still complaining about the lack of dynamism in intra-Africa trade. So tell us what this whole report is saying about the continent.
I'm sure you saw my reaction from my facial expression.
Yeah.
But I think the WTO too, actually, they are driven by the statistics and the numbers.
Yes.
And they're driven because they have an overall overview of what is going on globally. From the statistics they released, it looks like they believe there's going to be about 5.3% growth in African trade. I think from the number they released, they've seen a bit of growth in terms of digital commodities or digital goods exports. but they've not seen so much in terms of the percentage increase. Because if you look at that number, I think it's about 99% contribution to the entire global trade. But again, if you look at the way we've been exporting some of our music,
yes,
arts, culture, books, and all of that. So I think it's part of those things actually adding to the numbers. We're going to see more of that. But again, they are a bit, they sounded a bit of caution as well, due to the issues that they have around the Panama Canal and the Suez Canal as well, because that has a lot of, impact in the global flow of trade, to the world. And I think that's going to have a lot of effect on what will eventually happen. Then again, if you get our FTA right in terms of policies and getting Africa to actually trade among themselves, I think it's going to create another channel for us to be able to improve the number of trade globally within the continent and outside the continent.
I guess the key message there is Africa may be increasing its share of contribution to global trade, but within the African continent, we need to also create that trade value within the continent. Final story very quickly. The Nigerian exchange has bought a 5% stake in the Ethiopian exchange, a sign of the huge growth potential in the Ethiopian market?
Yes, Ethiopian market has actually been growing aggressively. I think if I'm right, I think it's the second most populous country in Africa. And they've seen a bit of interest in terms of capital. And after the demutualization of the NGX, I think it has created a lot of opportunity for NGX actually to see where the opportunities are and increase value to the NGX group. I think that's one of the reasons. And from what they've said, there's going to be a lot of technical support, because if it's an exchange that is growing, then they need some technical support from the exchange group, who has already been there for some time and has been one of the most capitalized in Africa. So I think that's going to help, and I think it's a good synergy for us to divest and invest in some other economy to improve, the flows of capital market trades and again synergy within African countries.
Absolutely. It's always good when you see Nigerian companies sort of venture out into the African continent and invest. We're retaining a lot of that value here. And the NGX has been leading in the area of digital and technology.
Exactly.
So it's great to see that synergy and partnership. And of course, we wish them the best. Well, Steve, you're going to stay on with us because we're going to be talking about the Naira and the Zimbabwean ZiG and the Ethiopian B. Those are all the local African currencies we're talking about. But thanks for joining us for now.